Hi, Dominique. Great to have you back with us after a very, very exciting week in US markets and in US data. Hope you're well.
Oh, very well, Henry. Looking forward to a long weekend.
No, absolutely. Yeah, you got Columbus Day, haven't you, on Monday? So it'll be a shortened US week, but there's still a lot of stuff going on for us to sort of delve into. I suppose first things first. Obviously, we've just had the very big NFP number, but wage growth is still a little bit on the low side. Could you just give us a little overview of what we're seeing and sort of talk a little bit more around that?
Yeah, that payroll number was one for the soft lenders. Super high payrolls, 336,000 plus 119,000 revisions. And wage growth, 20 basis point month on month. So what I think is going on here is that we have an administration that's pumped up the economy with the loosest fiscal policy since the 1960s, and at the same time open the taps on immigration. If you look at the increase in the labor force since end 2019, it's 80% foreigners. So there's been a huge recovery in foreign workers, refugees. The administration has just given 472,000 Venezuelan refugees work permits. And so I think the strategy is to keep inflation low by opening the gates to immigration. It seems to be working. The only problem is that immigration is a chief complaint of voters. And another complaint is inflation, which I think reflects in part that wage growth are not making up for immigration. So economically, this works, but people are unhappy. And as you know, former President Trump is leading in the polls. So the administration has just reversed its policy on the border wall with Mexico, decided that it was going to build it after all. Um, Even they are going to get the story about the low wage growth and the relationship with immigration. So let's see if this keeps going, this policy of letting more foreign workers in the US. Meanwhile, yeah, for sure. I mean, who wouldn't, which administration and which Fed wouldn't love the NFP we got today?
No, absolutely. And so in terms of the, I suppose, um, points at which these wage numbers might sort of start to shift, will it be almost primarily about whether the sort of loosening of on immigration can continue, or will it be, is it also, are the cracks starting to appear in firms' own behaviors in terms of, I mean, we've seen a lot of strikes, obviously, but where do you sort of see the cracks emerging first, I suppose, there?
So there is a question on whether the market sell-off we've had is going to hit growth. I don't think so. I think we've had 2 decades of financialization of the US economy, and the financial sector has become more and more decoupled from the real economy. You have a greater share of credit going to the purchase of financial assets rather than investment, economic investment in real things that can produce goods or services. You also have the fact that, the Fed got burned once in the spring, with banks not being prepared for higher yields. So this time around, we got yesterday the latest data on bank borrowing from the Fed. It's flat, not going down, but not going up either. So this time around, they must have been prepared, one hopes. So for sure, there will be pockets of the economy that will be hit by higher yields. I'm thinking commercial real estate, multifamily housing, for instance. There is a little bit of a cycle there with a bit of oversupply. But overall, I don't think, the sell-off matters much For the real economy, the main form of wealth for household is housing. No one is selling, so prices are not going down. If you look at household net wealth relative to household income, it's still higher than before the pandemic. So I'm going to stick my head above the parapet there and say, I don't expect much of an impact from the sell-off on the real economy.
Yeah, excellent. Thank you very much for that. Because we did hear from, I think it was Barkin earlier, sort of talking about the possibility of the selling off doing part of their job for them. It may have been a different one. Um,
So Mary Daly of
Daily,
the
sorry.
Fed, of the San Francisco Fed, made that point yesterday. I don't think she will carry much water with heavy hitters within
Mm,
the FOMC. I listened to a roundtable Powell had with business representative from Middle America. It's the Pennsylvania County where Harley Davidson bikes are being built. It's a really interesting mix of businesses. The market sell-off didn't come up once in the 1.5 hour discussion, but what came up times and again were labor shortages and inflation, and
mm.
to a lesser extent, supply chain disruption. Businesses are not back to normal with supply chains.
Excellent. Thanks so much for that. So we'll be hearing a lot more from Fed in the week ahead, and especially the FOMC minutes. Are there any sort of expectations around that, or what are you sort of really listening out for on that front?
Oh, the minutes are going to tell us that the Fed will hike more if inflation is higher than they expect, and less if inflation is lower, in very many details, shades of gray, but that's what it boils down to. I think the focus is really going to be about how long they will hold rates where they are.
Hmm.
In terms of speakers, we have a huge number of them next week, hawks and doves. Um, I, I mean, we've already heard from Bauman. She's one of the most hawkish. She thinks um, the Fed should hike more than once more. The rest, we had um, 12 dots showing one more hike this year and 7 showing no more hike. And so I think people are just going to go out and talk their dots, basically.
No, that's fair enough. That's can expect not much less from them. But do you think there won't be sort of any kind of real change based on this really sort of stonking NFP number, or any kind of sort of immediate reaction, or will they kind of be looking into the longer term? I know you're very sort of skeptical on the single data point reactions, but
No, this is a good data point for people who think that the economy is headed to a soft landing, and that's basically what the SCP statement is showing up. I mean, inflation slowing to 2.6% next year, um, without much of an increase in unemployment. So even with the one extra hike in
mm,
2023 that is in the SCP is painting a soft landing scenario. So I think, it smiles all around and
well,
probably a hike in November.
no, which is very good for. I mean, it's kind of in very much moving in the direction that you've been kind of plugging for a very, very long time, which is obviously good. We're also going to get quite a bit of data next week as well, including the September CPI. Do you have any sort of specific expectations around that, or?
Well, I mean, as always, it's not so much the level. I was going to joke, what's 10 basis point between friends? But the composition, it's a silly joke. The composition that matters. And the last print showed a widening of inflationary pressure to core goods, excluding used car, to core services, limited slowdown in housing. And last month, this was a month when we had a big increase in energy prices. And so what I'm looking for this month, given that energy prices relative to last month, I mean, pump gas prices haven't changed that much. I want to see if there will be a follow-through of this broader inflationary pressure. So I'm my expectation is that there won't be much slowdown in either super core services or core goods. I also think that there is a structural shortage of housing in the US due to restrictive zoning laws, much less so with multifamily housing, where there is a
Mm.
little bit of a cycle with oversupply, much more so for the single family units that Americans prefer. So, I mean, on balance, not much downside to the housing. We'll see.
Okay. No, cheers. And are there any other sort of major uh, data points that we'll be sort of keeping an eye out for, like
Oh,
surveys? Or
definitely. PPI and import prices.
mm,
We're starting to see a recovery in the goods PPI, which fits with my story of positive core goods inflation. So that's one I'll be looking at. Then the NFIB survey, so the small business survey. Last time it showed that small businesses wanted to raise prices, were planning to raise wages. You also saw with the hard components of the survey a clear recovery that was confirmed by the manufacturing PMI, to a lesser extent by the services PMI. So I'm looking for a continuation of this trend. So for me, this is actually quite an important data point. Then we have the University of Michigan consumer sentiment, and there I'm looking for a recovery in inflation expectations that, have fallen in a very mysterious way, given that actual inflation is not falling that much. So we'll see. I mean, there are lots of issues with those surveys. Completion rates have really plummeted, so
yeah.
the data is not that reliable. And finally, we'll get the bill for the full fiscal year in terms of the budget. I mean, the mysterious budget. Um, which has been amazingly large, and we get the final number and possibly some explanation for the CBO on why we've had such a shortfall in revenues, which I think reflects extreme weather
Mm,
related tax relief, but that we find out only in about 2 weeks' time, which is when those postponed payments have to be made. So
fair.
and then just to make sure none of us gets bored, we also get more stories from the US House of Representatives. They are going to elect a speaker. We're going to find out how long it takes, how hardline the speaker was. I mean, my humble opinion, the Democrats made a mistake by not supporting Speaker McCarthy, because he had been a very good negotiating partner. He passed a continuing resolution without any spending cuts during the budget, the debt ceiling brinkmanship in May. He'd agreed to a very good deal for the Democrats. So I think it will be much tougher to
Mm,
arrive at an agreement with the next Speaker of the House. Very likely that we will get a shutdown of sorts. Let's see. We get the first installment of that story this week with the actual election.
no, excellent. We'll definitely be keeping up to date on it via you. Thank you so much for that, though. I'm just going to really quickly run through some of the pieces because you've put out quite a few good ones in the last week for our sort of listeners to sort of pay attention to. One particularly interesting one was from yourself on the stagflation, and the sort of outlook for stagflation in the US. So please, listeners, to check that out. We've also got put out a rates weekly, which is sort of covering very timely on the sort of prospects for US, in particular, Treasury yields going even higher. So 5.5% is now Mustafa's call. And we've also got a little bit around what we're watching in BTPs and on the European government bond side. Then we have a trade idea survey, which has just been put out So sort of surveys across our network. It's all around why the sort of bullish dollar sentiment, which has really been sort of performing very well, is actually starting to potentially crack a little bit, or at least slow down a little bit within the network. And then finally, which very sort of, and you've touched on the importance of oil a lot recently. We've got Viresh's oil view and why he sees Brent back at $90 a barrel ahead. So a lot of good stuff to check out. And also, obviously, we've got our usual comments and the usual stuff from Dom and all the rest of our researchers. So thank you so much again for speaking with us today. Hope you have an excellent long weekend.
Henry, it's always a pleasure. And yes, I shall enjoy my 3-day weekend. This is the best time of the year in Southern California.
Oh, excellent, excellent. Take care. All the
Bye.
best.